After 4 years of trading, this is the exact entry model that I found gave me an 84% win rate and made me profitable. The gold standard entry is just a really clear higher high and then a decisive breaker structure. So you want a clear high and then a clear low. Ideally, you want a move like that to happen in one move. You don't really want it to consolidate or like maybe make a second high, anything like that. You want it to be nice volume, decisive move. So this is probably the best quality setup. The cleaner it is, the more likely it's going to move in your favor. Different types of setups here. Let's say you're making a high low. You make a new high here. We come back, try to make a new high, but you fail to break that high there, and then maybe you that there. So this is still a change of character, break a structure, but the volume in the correction is a lot less compared to that. So it's nice kind of drawing it out on lines, but what does that look like in market conditions? So really nice example here. This was a 4-hour with a daily level. So second hour of Asia here. This structure currently was bearish. You had this previous low here that I was looking at. Maybe that's reaction area. This was the second hour, 11. You had a break to the downside, came back. You break some highs here, but you failed to kind of break those highs, and then you broke these lows here. So how do you know whether to take a buy here off this breaker structure there, or to take a sell off this breaker structure? So there's two type 3s there. There's two shifts of structure. Because technically this shift here could be the pullback of this shift there. So you're selling into that shift there. How do you know which one to take? Remember, this as an entry model, the shift, it's only an entry model. It's not on its own. It's not anything special. It just tells you when to enter. So this is why it's important to keep in mind your higher time frame direction here. High time frame direction. That's based off, can be high time frame candle behavior. So previous daily closes, previous 4-hour closes, I'd say it's more high time frame, as well as market structure. For market structure, high time frame, low time frame, it doesn't really matter. You're going to see the same things, but the low time frame you go, you're going to see more detailed market structure. So each of these moves is going to be simplified into 1 or 2 candles on the high time frame. So it's pretty clear, simple shift here. This is the one trade I took today. This is just an example of what I wanted to go through, of how do you identify a good type 3 versus a less good one, I guess. It's not bad, but it's not as clear. This is a really good example of, like, technically, you can see this as a shift, but it's not as clean as this. So I'll go through that. But this, yeah, made a high here, made a new high, came, broke that low with nice volume there, came back, and then pull back, nice little scalp to that previous low there. This is a really good example of, so this would be a really nice type 3, where you break multiple lows, you have a really high volume decisive correction or shift. But for this, technically, you just barely break this low. So I can't remember who was it. Was it FX Trader maybe? I think it was an example where, like, maybe you just barely break a low, maybe like by like half a pip. Is that like a valid breaker structure? So yeah, it's not black and white. If you have a shift where you just like barely break it, are you gonna enter on that? It's a bit low quality. If you break too much, and then takes an hour for it to come back to the area, that's also not enough. So you don't want it to be too low volume, too high volume. In the middle, a good decisive move, but not too much, not too little. That's what you're looking for. So I would say it kind of respect to this previous low, but you have this breaker structure here. You broke these lows here. So this would be an example of you're making higher highs, higher lows. You make a higher high, you try to make a new high, you fail to make that new high here. You break that low there. Do you enter on that pullback? You can, if you're confident in a lot of other confirmations, but it's going to be a low quality entry because you're not getting that clear shift of a break of a low. This is like kind of internal structure that you're breaking this low here, Technically, this can be a pullback here, where you're like breaking lows here for continuation of this overall trend there. Because it's like internal structure. That kind of makes sense. Because you still kind of respected this previous low. So yes, you have a bit of a move, you have a bit of a pullback, bit of a push, but it doesn't really go that far. And with your entry, let's say you were perfect, maybe you're getting around 1-to-1. So it's not great. Now you compare it to, so this is around the same area of interest. It's around the 4-hour level. You first react to it a little bit, then you actually kind of test it. You test these previous 1-minute highs here as well, which is a bit nicer. But the reaction to that area, where you come in, make a high here, you have some kind of internal structure, a bit of consolidation, but you have a clear high being created. With here, you're coming up into this area here. There's no real clear high. That would be the most recent clear high here, this clear high. But if you want to enter on that shift, I guess keep in mind that clear type 3, you'd have to wait for like a break of that structure there. If that kind of makes sense. So you have a high being created, you have a low, you can have an internal structure low, and then you have a clear decisive high, and then volume really comes in. Technically, this is very similar because you try to make a new high, but you fail. But this is more similar to that, not that. It's not similar to this, where you try to continue that move. That kind of makes sense. I'm trying to like convey my intuition on like gut feeling wise. This looks a lot better than this. That kind of makes sense. So yeah, going into detail on why that is. Just look at the volume of this move. You want to enter with volume. You want to be in and out here. Price is likely to continue doing what it has been doing in price action. So if you have a move here, likely you're going to have a pretty decent move there. And you don't really want to hold trades that long. It's nice being in and out with volume, knowing quickly if you're right or wrong. So the pullback's there into this internal structure. Stop is always going to be above the high there, and then targeting previous 1-minute lows there. Since this is with high time frame, there's also more leeway to hold, if that makes sense. When you're taking sells, another thing to keep in mind, if you're taking sells, let's say a certain example of this on the day. So if you're taking a trade just with high time frame, yes, you should be looking to hold that a bit longer because it's with high time frame, but that's not always correct. It depends on when you're taking that or where you're taking that trade. So let's say that the open is here. Taking a sell, this is overall high time frame is bearish. Taking a sell, if you're taking a sell down here, like I did earlier today, I don't think you should be holding that trade as long as if you took a sell up here. Just because price doesn't move straight in one direction, it's a push and a pull. If you're taking a sell on a push and you try to hold that for a high time frame move, likely you're going to have to either go through a pullback or you're just going to get stopped out. So taking a sell above the open, especially on the daily, is a really simple, powerful thing to enter on trades or to be able to hold trades longer. So when it's creating that daily top wick, when you're entering in that sell on that top wick, that gives you a lot more confidence, I find, to actually hold that trade. Because if that candle flips and pushes, it's going to be a good move there. And I also find, going into more detail again, the longer it takes to pull back, kind of sometimes the further, if it's like a steady pullback, if it's not really high volume, if it's like a really nice steady pullback throughout the day, let's say this is around London, and then you have a shift, those are the best moves. Around the half of the day, where you've been pulling back with clean structure for the first half, then you have a shift and a push around London. So a lot of time people see that London kind of manipulates. It might manipulate an Asia high. That's more smart money stuff. I don't really care. It's just looking at what happens, patterns, and then how can you make the most out of that pattern. An example of this. If you watched the reels on Instagram, this is one of the days, it's quite a while ago, one of the days of the $20 challenge. 4.5k a day. This is probably one of the most perfect examples of that. So keeping in mind time, that kind of higher time frame. So I'm taking a sell here. Notice if you can see this, the sell is kind of around here. You see this there. The sell is above the open, quite far above the open. This is a daily type 1. It's just a candle, high time frame candle close, bullish to bearish, but bullish. Technically, you're creating a level there. It's kind of, think of it as similar to a shift in low time frame structure. Because remember, high time frame candles are low time frame simplified. It's not exactly the same thing, but it's kind of similar in the sense of that. So kind of a change. So it's the daily. I'm taking the sell above the open there, so that it gives more room to hold. 4 hour wise, you had a break of structure here, with you made a new high, broke this previous 4 hour low, came back to retest, kind of consolidated for a bit, broke a low again, came back to retest this low, looking pretty nice on the pullback. Hourly, on the hourly, you just look at this as a pretty simple break and retest, continuation of the high time frame. Another type 1 on the hourly. This is a type 1 on the hourly. You have a candle close bullish to bearish, exactly the same on the daily. So I'm looking for a sell above the open. This is also above the close as well, just to create that top wick, exactly the same as the daily. Remember, that high time frame type 1 is very similar to a low time frame shifter structure type 3. So because a lot of the time you'll see them, you pretty much always see a type 3 with either a type 2 or type 1 on another time frame. That's the type 1, the 1 minute. Yes, you made kind of consolidated for a bit. You made some highs, but the volume of that, like this volume here coming into that, really decisive breaker structure. Yes, you kind of consolidated for a bit, but it's a clear high. This is the previous high and low that you're looking at breaking there. It's a clear high. You clearly broke all these lows here. You had that alley candle close. When do you get the pullback of the type 3, that completion, that shift? It's all of the time at the open of a new 30-minute, hourly, 15-minute sometimes candle to create that top wick to then continue to sell. Also 30-minute being created there, 15-minute and 5-minute. This would kind of be like a 5-minute type 3 as well. So if you look at the move on this trade, that's a pretty big move. And the daily candle flipped, had a push. And I skirt into that. So keep in mind, if you want to hold a trade, make sure it's kind of with high time frame, but also be mindful of where you're taking that sell with the high time frame. Are you taking on a high time frame pullback, a high time frame push? Are you at the above the open or below the open if you're looking for a sell? Vice versa if you're looking for a buy. Keeping that in mind, you also had an area of interest here, level at the open and close here. You just try to stack things. The more you can stack, the higher likelihood that's going to play out in your favor. Don't overly focus on that shift. It's just an entry model. But hopefully this helps with like giving you more detail on how to differentiate like what is a good entry, what is a bad entry. It's really hard. I find the hardest part in trading isn't necessarily the entry, it's when to exit. How long do I hold for? What should my risk to reward be? How am I maximizing my winning trades without degrading my system? Or because the more you target, the less likely you are to win. It's just probabilities. Accepting that is a big thing. You can have a 2 RR, 3 RR system. You're just going to lose a bit more. Just finding what works for you. So yeah, I hope that helped.